Real people, real lives, real money. Forget the trading floors in the city. Saving and investing is about your money, your family, the life that you want to lead. Coming up, investing in shares, lessons from 23 years in the markets. The new face of retirement, creating a flexible third age. And where to invest your ISA and SIP. My tax year-end fund picks. But first, Ed Monk speaks to some experienced investors about the return of volatility.
As investors, we don't get to decide what the market weather will be. And just recently, it's been fairly stormy out there. As it happens, market ups and downs are all part of investing, and volatility is the price that we pay for the potentially high returns of shares and bonds versus cash. But that doesn't mean it isn't uncomfortable. Uncertainty and volatility are nothing new, however, and experienced investors will have seen it all before. I've come to an event in London to speak with some of Fidelity's most experienced investor clients to find out how they're riding it out this time.
When you invest, you have to be aware that there will be good times and there will be bad times. And I think the important thing is to make sure that you are prepared to ride out the bad times. You don't panic when something unexpected happens, because I think in life that's what will always be the case.
I don't pay much attention to the negativity and the volatility in the markets. I've come to appreciate that over a longer term it tends to even itself out. In fact, if anything, it tends to improve over a period of time.
There's talk of recession or downturn in the market. I'm not worried about that so much because I'm thinking long term.
When markets go down, particularly when they have very sharp falls, of course it's very disturbing. No one likes to see that. However, experience has shown us, if you use those downturns as an opportunity to invest in companies or funds that you really like, that's the best thing to do.
40 years ago, you picked up a newspaper once a day. Now you get 24 hours of news, and only the bad news is newsworthy. You have to learn to look past that and do more research and make your own view.
I am not really making any changes to my investment strategy. I'm gradually feeding money into the market, gradually, bit by bit. I don't think anybody can second guess the market value. So I'm sort of doing pound cost averaging.
I think at the moment is a very good time to invest, particularly in the UK market, and the uncertainty about Brexit and the low prices there are at the moment to take advantage of the funds that I have put aside in cash.
Investing for the long term for us has meant that we could stop work relatively young. It has meant that we've been able to fund a lifestyle both out of capital and income going forward. But it's given us the freedom to do what we want.
I'm very risk averse. So for me, making sure that what I have, that I've worked hard to get, is maintained, and hopefully it will grow over time, but allows me to do the things that I want to do when I want to do them without having to worry. And that's all you can ask for from life.
It's always interesting to talk to experienced investors, but never more so than when markets are difficult. The fact that these guys are still here and still invested is testimony to the fact that in the long run, markets tend to recover their losses. Next up, it's Montgomery, who has also been talking to some investors, and I wonder if the weather's any better where she is.
Thanks, Ed. We've got the brollies out here as well. Investing in shares can be a rewarding hobby, but for a novice investor, getting started might seem daunting. I'm in Wilmslow in Cheshire to meet 4 friends, all keen investors, and they meet here at the Unicorn Pub once a month to share investment ideas. Let's go and meet them.
When we started in 1996, It was an absolutely fantastic time to start buying and being interested in shares because the market was just romping up.
Yes.
I remember thinking at the time, the market it's a money-making machine. Why did I not know about this before?
Right.
Why have it taken me so long to discover it?
Going back 23 years, if I can ask you, what would you tell yourself 23 years ago that you know now that you wish you'd known then about investing in shares?
To start with, I would have been cautious. The more you know about the market, the more that alters your attitude to risk, because when you're familiar with something, you don't feel that it's as risky as you might have when you first started.
Mm-hmm. Once you get into a club and you get pooling of ideas, it broadens your horizons and you start to learn. I think learning is the big plus of the whole thing.
My advice to, say, my grandchildren would be to start early. To me, that's what I regret, that I didn't really start any serious investing until probably my mid to late 30s. Compounding, as I think Einstein said, is the eighth wonder of the world.
Yeah. Women are much more likely to hold on to investments, to keep them longer, to research them quite carefully, be very careful about what they buy in the first place, but hold on to them rather than doing too much buying and selling. And that strikes me as being quite a good idea, because you also hear that time in the market is better than timing the market, because timing the market is really difficult, almost impossible, really.
Yes, I mean, very often we're looking, perhaps we've got several investment proposals and we haven't got sufficient cash to fund them all.
That's right.
So we'll then look hard at the portfolio and say, is there anything there that's underperforming?
Right. What we also do, though, is quite often add more money to existing holdings if they're doing well. And that's related to the tip that you hear quite often of running your winners and cutting your losses. If you find that you have a winner, why not put more money into it and just watch it until
we also have a watch list, and I suppose we are a bit guilty of having shares on the watch list and we just watch them go up.
Yes, we do.
Yes.
Yes, we do.
But it does help. Sometimes somebody's come up with a suggestion, we're not quite sure, so we leave it on for a couple of months, see how it goes, and then make a decision later on.
We did that with Fevertree, actually. We had it on the watch list for about 4 months, and during that time it made £770, or it would have if we'd bought it. Right. And we sold it thinking that it had gone up too much and was too risky. That's why we sold it, and it just continued going up. We've seen 2 really serious bear markets, and we have survived both of them.
So plenty of investment successes to toast as well.
Yes, absolutely.
Yeah.
Cheers to that.
Cheers to that.
Cheers. So as we've seen, getting together with like-minded friends to share ideas can make you a better investor. Good food and good company add to the magic, with or without the unicorn. But as Dan Lane found out, when you've done your homework, you don't need to rely on magic. A well-planned retirement means you can afford to spend the cold winter months somewhere warmer.
Retirement is changing. The old model of study, work, retire no longer applies. We're talking a third age, not old age. Better health, flexible working, in many cases more money. Put it all together and we have more options than ever before.
Jeremy and Lloyd are taking full advantage of the new freedoms. They live here in Twickenham, but in January and February you won't find them here. This year's trip, Colombia. Let's take a look at how they've made retirement work for them. Hi Jeremy, hi Lloyd. Do I call you retirees? You don't really look like pensioners.
To be honest, Dan, I don't feel like a pensioner, but I guess that's an accurate description of what I am. I took early retirement from British Airways about 3 years ago, and since then we've been able to indulge our passion for travelling.
Fantastic. And a lot of people will want to be doing what you're doing. How have you made it work?
Well, obviously I had to think carefully about finances when I stopped working, but I discovered that the British Airways final salary scheme gives us the basics of what we need, and then additional income through Fidelity investments and a drawdown pension means we've got a flexible income stream that we can vary depending on what we want.
And is this the same for both of you, or are you both full-time retired now?
Well, Dan, I'm still very much working. I have a part-time gardening business, but my clients know that I take a sabbatical for a couple of months in the winter and they're perfectly happy with that. And then I have a part-time job with the specialist tour operator, Oku Japan. But I can do that with my laptop from anywhere in the world. It's not only youngsters who can be digital nomads.
And so you're really making this flexibility work for you. Was this always the plan, or have plans changed over time with regards to your retirement?
To be honest, I don't think we'd really thought too much about what we could do, but we realised that we can combine working and travelling, as Jeremy described, and so this really works for us.
I agree. I think our plans are evolving, and particularly with my gardening work, I will continue gardening for as long as I'm fit and healthy and still enjoying it as much as I do.
And do you know many other people doing this, or do you feel quite alone in that respect?
Right at the moment, I don't actually know anybody else who's doing this, but I really hope we can inspire other people to give it a go.
So a lot of people will be watching this and be very attracted to your way of life. Do you have any advice for them?
First of all, I'd say that planning is key. We'd obviously been thinking ahead for a little while, saving where we could to make this sort of lifestyle possible.
I think it's important to be creative in your planning, and I think you can combine continuing to work with having a pension or investments. I think modern technology gives us a huge amount of flexibility, and that delivers tremendous opportunities.
Thank you both very much.
Bye, Dan. Bye, Dan.
Even if we aren't planning on spending our winters in South America, chances are we are looking for more flexibility than our parents enjoyed. The good news is that with a bit of forward planning, the only limit to our third age is our sense of adventure.
Dan, could you just water the pots in the garden, please?
Yes, of course.
Thank you.
So it's all about preparation. Now over to Tom for some investment ideas to fund the retirement you want.
Thank you, Dan. Well, here we are, beginning of 2019. I'm cautiously optimistic, and my fund picks for the year reflect that. I've started with a global equity fund, as last year. This year, I've gone for the Fidelity Global Dividend Fund, run by Dan Roberts. It's a safety-first fund with a focus on capital preservation as well as growth and income. Now, the UK, as we know, is out of favour for good reason, and that's creating lots of opportunities, but I also wanted to have a safety-first approach here in the UK too. So I've gone with the Linsell Train UK Equity Fund, run by Nick Train, of course, high-quality fund, and that's going to allow us to navigate any choppy waters that we encounter over the next few months. Japan too is off investors' radars, and I think unfairly so. And the way I'm playing this theme is with the Baillie Gifford Japanese Fund. This is run by Matthew Brett. It's got a focus on robotics and automation, areas in which Japan has a real competitive advantage. And finally, another all-weather safety-first fund. I've gone for the Fidelity Select 50 Balance Fund. Now, the balance comes from a mixture of shares and bonds, and the quality is a consequence of focusing on the Select 50 list of our favourite funds. Real people, real lives, real money. For more insights from me and my team, visit us at fidelity.co.uk. Listen to Money Talk Radio, our twice-weekly podcast, and follow us on social media. Thank you and goodbye.